Okay, welcome to the weekend video. This is Enda here, obviously. I'm going to try and do this without shaking the table too much. Okay, let's just get right into it. There is a lot to talk about, surprisingly enough. Okay, I'm going to start on the FX and then move on to stocks and metals and so on and so forth. Okay, so we're starting with euro dollar, and since this kind of since this right shoulder here, we had a three-wave recovery. I'm counting. Start again. I'm counting a 1-2 pattern heading down into a 3. Now this can still. I'll talk about the alternate later, but a 1-2 pattern heading down into a 3 for the moment. The market created a right shoulder, so a lower high after a three-wave recovery. So that's pretty standard, expected, even pattern, and filled out a nice trend channel. And then we had a nicely sharply lower this week with well, over the last let's say 10 days or so. And we corrected higher yesterday, and we seem to have completed another lower degree correction. So we could be looking at a 1-2-1-2-1-2 pattern, and if that's the case, then next week's going to be a doozy to the downside. Okay, so let's get into the hourly pattern here. I'll show you where we stand. So that's the three-wave pattern up in wave 2. Corrective pattern, lower high, and then a nice sharp move lower. So far we've got a 1-2-1-2 pattern, and today you might be tempted even to call this a 1-2. So could it be 1, 2, 3, 4 degrees of impulse waves lower? It's possible. Now, how will we know if wave 3 down is going to take force next week? Well, obviously, if we hold below 120 and we continue to make stabs to the downside again, so we continue to make further kind of impulsive, sharp moves lower, that will definitely point to a pickup in acceleration to the downside. And if that happens, then we could be on for wave 3 of 3 of 3. Let's see if are there some targets that we could look for wave 3. I'd say a minimum target would be probably 115.90, so previous fourth wave, but I think we should break through that, to be honest. It seems a little bit shallow at this point in time. Come out of there. If I can get this to move. Okay. The 162% Fibonacci extension of wave 1 comes in at 115.90. Well, call it 116 flat. The 261 comes in at give me a price on that, at 112. So you could go anywhere between 116 and 112 on that. Probably lower end of split the difference there. Maybe 114.50 or 115. But if we're right on the short-term count, then we should see immediate declines on Monday, and throughout most of next week. The alternate count here would be for a larger wave 2, because I still favor the downside because we've got 3 waves up. That's pretty clear 3-wave pattern up. So that's a corrective pattern for the moment, and we're kind of heading lower again off that corrective lower high. So I favor the bit downside in a third of a third. On the off chance that this 3 waves up is followed by 3 waves down, and then we develop into a larger C wave, so this would develop higher again, then the alternate would be for an expanded flat wave 2 there. And we should, again, if we don't head immediately lower on Monday or start making progress to the downside on Monday, then we'd probably have to look more closely at that alternate wave 2. Okay. Getting to, here's the 4-hour in cable. I'm looking at 5 waves down, 3 waves up. Again, we have a corrective lower high filled out today, and we seem to have we're heading down impulsively off that again. I'm just organizing these labels here in the 4-hour chart. You can see that I'm still probably moving in favor of, let's say, the longer triangle fourth wave there. So that would require a move down in 3 waves overall in wave D, and then a move up in 3 waves in wave E. So you could still actually make this argument for Eurodollar also, that we are just heading, sideways for another 6 months or so, as a triangle, a long-term triangle plays out. I'm talking about maybe 4 years here, because that's all that's happened in the Atlantic pairs, is we've just drifted sideways. But anyway, for the moment, we still look like we're heading down into wave D, and I would suggest that this fourth wave triangle here, 129, 130 area is a reasonable target for wave D. We have a kind of an oscillation level at around 134, so 134, between 134 and 135. So yeah, you'd split the difference between that and probably head towards 130, and then back up towards that oscillating level again in wave E. So we've still got wave D and wave E to go, it seems, in cable. But for the moment, we're heading lower, and there should be more downside in wave D overall. Let's get into dollar yen. Actually, my computer's deciding to to go wild there. Okay, so we've got action going on downstairs. Sorry about that. That's the computer going a bit wild. We've had a nice impulsive run-up. Been looking for this impulsive run-up for a good while. We did seem to do nothing but go sideways and drift lower over, say, the previous year or two. Since last April. You could actually even that big V pattern there. You could call that. You could split the difference on that and say that we've gone nowhere. We've basically created a big double bottom between the extreme low last March and the higher low that happened this January. And now what we've done is move pretty reasonably and impulsively higher over the last couple of months. This is a positive in terms of the long-term wave count. You can see that I have been tracking this long-term triangle. Here's a daily count in dollar yen. Long-term triangle that's traced out, 5 waves to the side, like a 5-wave pattern sideways with a contracting range at the same time. We bottomed out this January in wave E of B, and then we have impulsively moved higher off that low. So if wave C, if this large degree wave C is actually underway now, then we have a long way up to go. The 4-hour count again, you can see that we've got wave 1 and wave 2 most likely complete. There is another. There's actually a couple of iterations that you can use on this count right now, and that could be for a series of 1-2s. So you could go 1 2 1 2 1 2 3. That fits also. I won't discount that, and it doesn't. Even if that was the case, it doesn't detract from the count I'm working on right now. Okay. So, what are we to expect? We've got wave 1 and 2 complete, then we are in an acceleration in wave 3. So here we are in wave 3. Go to the hourly count, and we'll see where we stand on that case. So it's wave 3 in blue here on this count. Wave 1, wave 2, and then we had a series of 1 2 1 2 patterns, and then an acceleration higher in wave 3, short correction wave 4, rally wave 5. Now, what we seem to be, that's wave 5 of 3 of 3. So you can see that the major acceleration happened in wave 3 green of wave 3 blue. So third of a third is where you would expect the major acceleration anyway, so that's what happened. What we've done over the last week seems to be just kind of grind sideways, so this is quite positive actually. The pattern's going nowhere, but in terms of the larger, the price is going nowhere. But in terms of the larger pattern, this is pretty positive because what we seem to be putting in is just a consolidation rather than any sort of, let's say, any sort of high that's in right now. What seems to be happening is either a triangle, as I've shown here, in wave 4. So a fourth wave triangle, you'd expect that. But triangles is usually, you'd expect them in a fourth wave or a B wave. So we've got a possible candidate for a fourth wave here. So triangle fits the bill. So far, we've only got an A and B out of that triangle, so we would expect a decline in wave C. Excuse me. If wave C, if we get a next drop, and if that next drop falls below 108.30, well, we could probably call that 108.35 or 108.32. Yeah, if we fall below 108.32, let's say, then the triangle would probably switch to a flat correction. So we've got 3 down in A, 3 up in B, and then 5 down in wave C. So wave C would probably drop down below 108 to complete, and then we'd head higher in wave 5. So we're still looking at a correction. It's yet to be decided what pattern that correction actually ends up being. Okay. If this is a triangle, then we should see a further consolidation early next week, and then we should head higher towards the middle of next week, end of next week maybe, in a fifth of a third wave. Where would that fifth wave take us? I would expect probably above 110 anyway. That's probably a minimum expectation, really. We have the next major, let's say, resistance level lies at about 109.80, I think. And then above that again, we have 2 further tops, one at 111.70 and one at 112.46. So definitely a break of that B wave 109.75 would be expected. But I think it's reasonable to expect that we might would break the 110 level in wave 3 when we're done. Okay, so next week, let's see how this fourth wave consolidation goes, and then we'll head higher into wave 5. Okay, here is the 4-hour pattern on the Dow is what I'm working with right now. It's another variation on the ending diagonal. I think it's a reasonable. You could either call this wave 1 here and this wave 3 here, but for the purposes of illustration, I think it's interesting to kind of to give, let's say, the benefit of the doubt to wave 1 being the longest wave, rather than wave 3 or wave 5. So what's happened here is wave 1 has put in the longest. Let's get a fib level on that. In or around. Wave 1 has put in the longest wave, then wave 3 seems to be measuring just about the 50%, a little bit lower than the 50% of wave 1, and then wave 5 is just above the 38% right now, so probably up about 40%. You wouldn't like to see wave 5 push any higher than this right now because it's not, let's say it's not an invalidation of the ending diagonal pattern, but it's definitely let's say a hint that there's something wrong in that pattern there, because you would expect that wedge to continue and each progressive impulse wave within that would be smaller and smaller. And usually, well, in a perfect form, in a perfect world, they would relate to each other in a Fibonacci sense. But we're not. We're in that ballpark right now. We seem to have a slight throw over here above that upper trend line. The wedge is a reasonable pattern. And we can still pull 3 waves within each leg, let's say, at the moment. So I think this is a viable pattern. On the short-term chart, I have actually kept the previous or the other interpretation. So wave 4 and wave 5 is this larger pattern here, you can see, with 3 distinct waves in it, and I'll show you that right now. And I'll show you how that is pointing to an end also. So I'm going to keep this alternate pattern on the 4-hour chart, and we'll move on to the hourly count here. You can see here the alternate count is shown, that 4-hour alternate count here is shown in circled in red. But for the moment, we have wave 4 back here at the 29,400, well, what is it, 29,600 level. We have 5 waves up. You can read 5 waves up in wave A, 3 waves down in wave B, and then 5 waves up again in wave C. So we have right now a target for wave C at about, let's say, 32,900 or so, and that's where wave C in gray reaches equality with wave A in gray. So we've got an A, B, C zigzag pattern to complete wave 5 of 5. So that's still the ending diagonal pattern. It's just a different variation of the same pattern. Okay, so I think wave C, we've probably done enough. We've done more than enough there. At the moment, we're almost at the equality level. The medium term, the 4-hour momentum seems to be cresting out again. The hourly momentum seems to have given up the ghost and turned lower, so we're creating a lower high. There's nothing solid, or let's say there's no guarantee on that front, but it is a good indication that we're coming to the end of that. Okay, next week again, you just look for, let's see if we can pull a reversal pattern out of this. The previous one ended up being a correction. The one before that ended up being a correction. So let's see if we can push towards an actual impulse move lower pretty soon. Okay, let's move on. We've got, this is the hourly gold. Let's get the 4-hour gold. Okay, so 4-hour gold, I was talking to you the previous time about this large channel that has traced out off the previous all-time high. So that was up at 2074 or something like that. This large channel, I'm still counting a correction. That was a 3rd wave high. This here will be a 4th wave low once it actually completes. I think we're very close to that low. There is the possibility that we drop into that 1600 handle before we move higher, but this week's action has not been it has left the door open, let's say, for a reversal pattern to develop now. We have the trend channel filled at that recent low. So, you know, if you're going to build a position, you know, now's not a terrible time to start. I am contemplating next week myself, just starting to kind of, let's say, even if we do make a new low down around the 1600 level, you're not going to be able to pick that low anyway. So, you know, my gut tells me this is still a corrective decline. It's in general, it's 3 waves down. We've got 3 waves down in A, expanded flat wave B, and then maybe a wedge pattern wave C. Let's see, on the short-term count, I'm kind of allowing for a larger wave C to trace out. But I think we're pretty close to a significant low in gold, and it's I think it's time to start getting ready for the next upside or the next upside opportunity here, especially if we get a pretty significant. Let's say we get a decline into 1600 next week. Let's say that just happens, but we get a nice significant bounce and corrective higher low. then that's the kind of major signal that I'm looking for here to close out wave 4 and to move on up into wave 5. So long term, I'm very bullish gold. Long term, I think wave 5 we could push up to 3,000 in wave 5. If we get the daily count there, you could easily, let's say, I think we could, given the excessive kind of bearish sentiment that seems to be around gold right now, I think the next leg up in wave 5 could push up towards that 3,000 handle. It'll be a large 5-wave pattern anyway. I would say that the minimum target would be where the line meets that upper trend channel line, somewhere above 2,200, maybe 2,300 would be the minimum target. But I would expect we would move above that, and maybe we might see that 3,000, that big round number to top out a 5th wave. I think that'd be pretty good. In terms of the weekly pattern, the weekly pattern is probably a little bit more bullish for wave 3. So wave 5 of 3 is what I'm looking for. So we're probably, well, the weekly pattern is probably pointing to about 2,500 up to about 28 or 2,900. We are correcting in a 4th wave, and you can see that we should push higher in a 5th wave. 4-hour count again, you can see that channel is filled. We're close to a low. If we haven't put in the low already, we're close to a low in wave 4. Here is the main count, let's say. The main count allows for one more push lower into that, probably around that 1,600 level in wave 5 of C of 4. At the moment, we are either, it's hard to know, we seem to have fallen in 3 waves into today's low. Today's low came in break of 1,700 again, so 1698, but the bounce off that low seemed quite impulsive at the moment. So I think we're probably tracing out a flat correction 4th wave. So we'll probably push up to about 1750 or maybe even 1760 before heading down into wave 5 again. So wave 4 is still in motion, let's say. Wave 4 is still in motion. We probably will see a break above that 1740 high early next week. Probably a push up to about 1755 or 1760. Meet that downward sloping trend line there again, and then head lower into wave 5. That's the kind of the base case scenario, with that alternate count on the 4-hour chart still in play, and that's going to be in play until we get a significant break of that 1676 low. If we get a break of that, it rules out the alternate count. Okay, so let's move on. In crude oil, crude oil is that's about. I know there's a lot of action happening over bad actors and bad actions going on over in the Gulf states at the moment. But this is a C wave top, and at the moment it's a blow off top. It's a commodity top, basically. So what are we going to see next? We're probably going to see a very impulsive decline pretty quickly. If you go out to the daily count, you can see here we've got a large channel, pretty much full. Well, not filled, but pretty much we're getting there. 3 waves up in a possible 4th wave, and we head lower into a 5th wave. Should probably bring us back below that. If we get a failed 5th wave, we'll probably head towards a 20 handle again. And I know there's people probably cringing at me right now, but hey, I'm just looking at the pattern. That's all. Take it out on the pattern, not me. Anyway, for the moment, it's hard to know if we have a top in or if this will actually only, if this week's decline and lower high will actually only turn out to be some sort of a short-term correction before we head higher. That's still to be decided. So I'm kind of apprehensive to make a call on crude oil until we get some sort of a reasonable 5-wave move lower at a larger degree, especially a break of that previous 4th wave. So that a break below 59 again would be very advantageous in terms of making a larger call on this one. So I'm going to leave that for the moment and we'll move on. Okay, there is the S&P. We have pushed out to a new high. Well, no, actually, we haven't actually pushed out to a new high. So this wave count is it's absolutely torrentially raining outside. If you can hear that, I should bring you over and let you see that. Horrible weather we've had this week. Horrendous. Like this. Well, I suppose it's March, isn't it? That's what you're expecting. Anyway, again, we're looking at the ending diagonal scenario. Maybe we have a top in place. I don't quite know. We did push to a very slight, well, double top today. Didn't quite push out to a new high. It's very weak overall. The action over the last month has been. I know we've had significant declines, significant rallies, significant declines, significant rally, but we've basically gone nowhere. You wouldn't know that by listening to CNBC, but everything points to a top here, guys and gals. So you know my general sense on this one. We're approaching some pretty serious trend lines. One in terms of the ending diagonal, or sorry, some pretty significant tops in terms of the ending diagonal. We are, if you want to look at the momentum again, we are still tracing out lower highs momentum. The pattern seems very full. You know, we've had either 5 waves up or 3 waves up. You could count this final fifth in as a flat fifth or as a zigzag. It's kind of your choice on that, really. We've had 3 waves down, and now we're tracing out 5 waves up. So the ending diagonal pattern is full, and the momentum is going nowhere. So my book, or my gut feeling is, as usual, that this is the top. You can never put a finger on the top. Wouldn't that be amazing if you were able to do that? But it has all the hallmarks of a horrendous top. I was reading articles during this week, and people are actually taking out second liens and third liens on their home to do renovations, obviously, because prices always go up in homes, but also taking out second liens on their home mortgage to buy stocks. And I will bet there's people taking out second liens on their house to buy Bitcoin. Okay, short of the thought. We have a reasonable target here where wave 5 in blue here reaches 162% of wave 1, so that's the 1.618 extension, Fibonacci extension of wave 1. That gives us 39.90. Would be interesting to see if we hit that and to see what happens after that. That would be a nice, let's say, cherry on top of this cake right now. Anyway, for the moment, I can't say that the top is in, but I just know that this is going to end in disaster. Anyway, time to move on. Okay, here is silver. We're still looking at that 1-2-1-2 pattern, heading down into a C wave. I know that I was chatting to one of you guys there during the week, and he had a very legitimate point of view, and I had to kind of, scratch my head for a moment. And I was like, you pointed out that I was pretty much bearish on everything, but I think after a review, I'm kind of half bearish in general. My general stances, I'm bearish on most things. I'm quite bullish on gold long term. I'm quite bullish on silver long term, and for the medium term anyway, I'm quite bullish on the dollar, because I think that's probably the most squeezed market, or that'll probably, in the end, that will probably end up being the largest short squeeze that you'll see in history once people actually figure it out. But there's probably three areas where I'm reasonably bullish. That'd be precious metals and the dollar. And lots of people say, how can you be? Isn't that two sides of the same coin? You can't be bullish on both. No, not true. That's just not true, because everybody can be bullish on the dollar and they can be bullish on the stock market. That's two sides of the same coin, because the stock market is valued in dollars. Let's say the Dow and the S&P valued in dollars, and the dollar is the unit of evaluation. So if the dollar goes up, shouldn't the stock market go down? Because you should be able to buy more units of stock per dollar. Well, that never happens. Or that correlation, or that anti-correlation, is never pointed out by people. It only comes up when people talk about precious metals. And I'll tell you the reason why it only comes up when people talk about precious metals: because precious metals are still currency. People still know it inside their heads. Metals are still currency. They always have been, and they always will be. It's good enough for God, then it's good enough for me. I don't worship precious metals, but if you're planning for a long-term future, it's not a bad idea to own some. Anyway, I don't think we're at a low yet in silver. I think we still have a pattern, a 5-wave pattern decline in wave C of 2 to complete. Minimum, we should break 21 again. If we do break $21, then will be time to start looking for a low in wave C to complete this large expanded flat, almost expanded flat, just about. The B wave just about popped above the initial high in wave 1. So we had 3 waves down in wave A, 3 waves up in wave B, and we should get a 5-wave pattern lower in wave C. We're not there yet. Let's say the lagging, the fact that silver is lagging on the downside, I think will turn to silver lagging on the upside. So it'll probably take silver longer to put in a final low in wave 2, and will probably turn up higher in gold before silver makes the low. That's the theory at the moment anyway. We'll see how that works out. Okay, so we still have a large 3-wave pattern to play out in wave 2 of silver, and then we should head higher into wave 3. So says the pattern anyway. We'll see how it actually works out in real life. I wanted to look at DAX for a second. On the DAX, I'm still partial to the B wave idea. This is a long-term chart here in the DAX. So the decline into the March low would have been an A wave down. And then, get rid of you, the rally up into the current highs. I think are we up at new all-time highs again in the DAX? Yeah. That will be a B wave high. So we've got an A, B, C pattern up. So it's an expanded flat, basically. And wave C down should be an absolute car crash of a decline. Should get 5 waves down. And give me a second here and I'll illustrate for myself. Okay, we should get 5 waves down. We should at least break the wave A low, so that'd be 79 below 8,000 again. I think we're going way lower, to be quite honest. I think we could easily look at. I think we could easily look at the range somewhere in the 0709 decline. Somewhere back there would be a reasonable target, I think. Okay, if you go into the 4-hour chart here, you can see the rally off that March low last year is wave A up, and A, B, C down in B, and then what seems to be 3 waves up, either 3 waves up, where wave C is tracing out an ending diagonal, or we've got similar to the Dow, we've got a larger ending diagonal wave C. So both valid counts right now. We will see how that plays out over the next couple of weeks, but it looks like we've got 3 waves up into a new high, so that would fit an ending diagonal scenario, because wave 5 of C would be in 3 waves. So each internal subwave would be 3 waves. So wave 5 of C would be in 3 waves, and then we should break down impulsively out of that. So it seems that we are there, and it seems that tech seems to be leading the way in general. This is the Nasdaq. Excuse me. Possible 1-2-1-2 pattern, or you could trace that out as 5 waves down. You could go wave 1, 2. Actually, let's kind of pull you up a bit here. We could go wave 1, 2, 3, running flat wave 4, and then wave 5 down. So this could be all wave 1 down in blue, let's say. I don't think I have that marked that way in, excuse me again, in the short-term count, but this could be wave 1 down and a larger wave 2, or it could be a series of 1-2s. It could be wave 1 and 2, 1 and 2. Get to the hourly count here. That's the way I have shown it on the hourly count, is a series of 1-2s. So I've got wave 1, 2, 3, 4, 5, wave 1 and 2, 1 and 2. Equally as valid is the let's say the alternate view there. So that could be, we have retraced 50% there. This could also be wave 2 here, and 5 waves down into wave 1. So if you follow me here for a second, it could be wave 1, 2, and then acceleration wave 3, a large running flat wave 4, and then the final rundown in wave 5. So both interpretations are correct, I think, at this moment in time. And both interpretations point to further declines next week. So if wave 2 is complete, that is. Either wave 2. So I think that does it. If we're done here, then we're down into a third wave. Then we should follow all the other indexes also. Thank you so much for listening. If you hung on for that long, God bless you. And I'll see you. Actually, we're going to go straight into tonight's update on the website right now. So that'll be there for all the members in ours. And until next week, when you see my big mug again, you'll know it's the weekend. God bless. Be good. See you on the flip side. Shalom. Bye-bye.